How to invest in US stock market from India. Are you in India and dreaming of investing in US giants like Apple, Google, or Tesla, but unsure how to do it legally and profitably? You're not alone. But here's the harsh reality. If you're not investing strategically, you're losing money every day. Inflation is eating away at your savings. The value of your hard-earned money is shrinking. Did you know that Indian investments in US stocks surged by over 300% in the last 3 years? According to RBI data, Indians invested over $1.6 billion in US equities in 2024 alone. This is because the US stock market has historically delivered an average annual return of 10% over the last 50 years, significantly higher than many traditional investment options in India. But why the US market? As Warren Buffett famously said, never depend on a single income but make investments to create a second source. Investing in the US stock market opens up a world of opportunities beyond Indian borders. What if I told you there's a way to grow your wealth globally, right from the comfort of your home? In this video, I'm breaking down the exact steps you need to start investing in the US stock market from India. By the end of this video, you'll have all the knowledge to confidently make your first international investment. Later in this video, I'll reveal a profit investment secret in step 4 you definitely must know. Are you ready to unlock global wealth? First things first, why should you even consider investing in the US stock market? Imagine owning a piece of the world's most powerful companies. Not only do you get to grow your wealth, but you also get paid in US dollars, protecting you from rupee depreciation. Companies like Apple, Amazon, and Google are not just American, they dominate the global market. By investing in them, you're tapping into worldwide growth. For example, Amazon's stock price grew by over 1,000% in the last decade. Adding US stocks to your portfolio reduces risk. When Indian markets are down, US markets might be up. It's a win-win. Historically, the US dollar has appreciated against the Indian rupee by an average of 3 to 5% annually, boosting your overall returns. As Robert Kiyosaki once said, the rich invest their money and spend what is left. The poor spend their money and invest what is left. By investing in US markets, you're not just spending, you're building wealth. But is it even legal to invest in the US stock market from India? And how do you get started? Yes, it's absolutely legal, thanks to the liberalized remittance scheme known as the LRS by the Reserve Bank of India. But there are some rules you must follow. You can invest up to $250,000 per year under the LRS. This limit includes all international transactions, so plan accordingly. All gains are subject to capital gains tax in India, so make sure you file it in your income tax returns. Sounds great, right? But how exactly do you get started with investing in the US stock market from India? Step 1. Choose a brokerage platform. You can go with Indian brokers that offer international investing like Zerodha, Upstocks, or ICICI Direct. Or use global platforms like Vested, IND Money, or Stockle, which are tailored for Indian investors. Step 2. Complete the KYC process. You'll need basic documents like your PAN card, Aadhaar card, and bank statements. The process is typically digital, taking about 2 to 3 days. Step 3. Fund your account using the LRS route. To invest in US stocks from India, you need to transfer money from your Indian bank account to your international brokerage account. This is done using the Liberalized Remittance Scheme, or LRS, by the Reserve Bank of India. So, what is the LRS route? The Liberalized Remittance Scheme allows Indian residents to legally send up to $250,000 per financial year abroad for various purposes, including investments. This limit includes all international transactions, so if you're also paying for education or travel, those amounts will be deducted from this limit. All transactions under LRS are legal and regulated by RBI, ensuring transparency and compliance. Here's how to use the LRS route. First, choose a brokerage platform and link your Indian bank account to it. Next, complete the necessary documentation. You might need to submit a signed A2 form, declaring the purpose of remittance. Then, initiate the fund transfer. Use the outward remittance feature in your bank's net banking or visit a branch. But keep in mind the costs involved. There's a currency conversion fee that ranges from 0.5% to 2% of the transferred amount. Bank charges can be anywhere from 500 to 2,500 rupees per transaction. And don't forget the GST on bank charges, which is 18% on service fees. Sounds easy, right? But once your money is in your brokerage account, what should you invest in? Should you go for individual stocks, or is it better to buy ETFs? Step 4. Start investing. You can buy individual stocks like Apple, Google, or Tesla, or invest in ETFs like the S&P 500 for diversified exposure. As Peter Lynch wisely put it, know what you own and know why you own it. Research and understand your investments before diving in. Now, let's talk about the best investment options for Indian investors in the US stock market. If you're new to investing, don't worry. I'll explain everything in simple terms. There are 3 main types: blue chip stocks, safe and reliable growth stocks, high risk, high reward, ETFs and index funds, diversification made easy. First up, blue chip stocks. These are shares of well-established and financially sound companies that have a history of reliable growth and stability. Think of them as the safe bets of the stock market. These companies have strong financials, meaning they are less likely to go bankrupt. They pay regular dividends, money paid to shareholders from the company's profits, which can be a steady source of income. They are safe, reliable, and less volatile, suitable for beginners who want steady growth. However, they have lower growth potential compared to newer, fast-growing companies. If you had invested in Apple 10 years ago, your investment would have grown by over 800%. And on top of that, you would have received dividends regularly. As Warren Buffett says, it's better to buy a wonderful company at a fair price than a fair company at a wonderful price. Blue chip stocks are those wonderful companies you can hold for decades. Sounds safe, right? But what if you want higher returns, even if it comes with a bit more risk? Do you want more growth? Next, let's explore growth stocks. These are shares of companies that are growing much faster than average. They usually reinvest their profits into the business instead of paying dividends. They have high growth potential, but they also come with high volatility. Prices can rise quickly, but also drop suddenly. If you had invested in Tesla 5 years ago, your investment would have grown by over 1,500%. However, you would also have experienced huge ups and downs along the way. Now that you know the best investment options and the pro tips to maximize your returns and minimize risk when you invest in the US stock market from India. If you don't know this, you could end up taking on too much risk or missing out on potential growth. Or even worse, you could lose everything. I'm going to reveal how to build a profit-diversified portfolio in my next video.